was trading lower on Friday morning amid weak fuel demand. The ruble is losing ground against the US dollar and the euro as the crude prices are falling. Oil futures went down by 1% on Friday and were on track to end the week with the largest drop since June. Sluggish demand for fuel and ample oil supplies have offset support from a weaker US dollar. In the early session, Brent oil futures lost 0.77% to trade at $43.73 per barrel, while WTI fell by 0.87% and settled at $41.01 per barrel. The North American grade is set for the first weekly drop in 5 weeks. On the New York Mercantile Exchange, WTI oil futures for October were trading at $41.01 a barrel, which is 0.87% less than in the previous session. On Thursday, WTI futures contracts were down by 14 cents or 0.34%. Analysts at AxiCorp think that oil prices can be capped by a seasonal decline in oil demand. Besides, it's reported that Iraq may fail to fulfill its obligations under the OPEC Plus agreement on output cuts. In the meantime, the report from the US EIA showed that US gasoline demand fell to 8.78 million barrels per day last week from 9.16 million barrels a week earlier. RBC Capital analyst Mike Tran noted that soft margins are likely to cap further crude rallies and more supply cuts are expected this fall to expedite the rebalancing of product stocks. Oil production cuts have led to a significant decline in US gasoline inventories in the past 2 months. Yet, the data shows that driving dynamics in the country remained unchanged over the past 6-8 weeks. Meanwhile, the ruble is weakening against the US dollar and the euro due to the negative situation in the energy market. On the Moscow exchange, the US dollar average weighted rate settled lower by 28 kopecks to trade at 75.18. Yesterday, the dollar-ruble pair was trading at 75.46. Oil prices continue to fall in the Friday session and are on track for the biggest weekly drop. The downtrend in the oil market pushes the ruble lower against the US currency. That's all for now. Thank you for watching and stay tuned.